All right, this is the AgriTalk video supplement for the week of Monday, November 23rd. Today I'm covering March corn, February live cattle, and January soybeans. I had to think about all those. We've been rolling recently in all of those, actually, but corn and live cattle last week. Before I jump into it, just wanted to emphasize, if you go to my website, rtacadvisory.com, you click on the AgriTalk link at the top of the page. It'll take you to the video. You've probably already been there if you're watching this video right now, but please tell any of your trader, hedger friends or associates to please fill out the free trial form at the bottom of the page. I just take your first name, last name, email address, phone number, maybe a little bit about yourself. It'll include 2 weeks of unfettered access to all the work that I put out. There's no obligation, no credit cards, no nothing. I don't put you into an email funnel afterwards that hits you over the head with all kinds of sales pitches. And it actually includes a consultation. So I call you up early in the 2-week trial to learn about you and your trading and to see if you have any questions about the markets in general. So that's all I'm going to say about that right now. Let's start with the broader corn futures market. And this is just sort of a big picture reminder. I've been talking about this formation since I've actually been on the show for the last few years, because this is a monthly chart. This is the broader corn futures monthly chart. And, it held beautifully in September of 16th. That was actually the first real test of this formation, which uses the 08 and 12 highs against the 05 low. And then it held a half a dozen times following that, closed below it last March. That was a long-term sell signal. Very little follow-through to speak of. And then in September, we closed back above it. So I see this as a kind of a failed long-term sell signal, which is, in essence, a valid sign of longer-term strength. There's still an updraft here, still expecting the 465 and a quarter formation over the coming months. Maybe a matter of weeks, and I'll get to that in just a moment. Let's talk about the nearer term or the midterm outlook. 394 even, solid pullback support if tested over the next week, 2 or 3. There's no indication of that, but if it does get tested, this is a speed line that can absorb selling really into later winter. In fact, above which we should, I'm going to guess, by the end of January, reach that 465 and a quarter channel top. So that's in play right now. And in fact, let's take a look at the March data only. This is a March weekly chart. The first 2 I showed you were continuation charts, which included previous contracts that are sort of tacked together like a chain. This is just March 21 contract data only. You can see 433 is an old area on this chart that goes back to the summer of 19, and we've been testing it recently. We do need to get up and over it. I think even a daily settlement above it should result in follow-through buying, but certainly if we close the end of this week above 433 even March contract, then this 465 and a quarter formation, I think we should probably reach it then by the end of December, or in other words, over the next 3 to 5 weeks. 465 and a quarter, significant area of resistance that can contain buying into next summer. Once we test it, the market could fall back into the 360s again within a matter of months. I'll also add that closing any week above 465 and a quarter is considered a significant buy signal into spring, summer of next year. Believe it or not, I have a 650s objective if that were to happen, but it hasn't happened yet. Let's move on to February live cattle. We rolled from Dec to Feb last week. This is a big picture. I've been talking about this since last summer. We settled above this long-term descending 1/3 speed line in late July. At that point in time, I was indicating the 122 handle as a 2 to 3 month objective. Well, since then, over the last 3 or 4 months, we've been trading sideways in these fairly reliable rotational highs and lows. But I still have long-term support in what I would call the 101 to 102 handle, 101.10 to 102.77. I don't know if we're going to get down there in the coming weeks, but we just might, holding below this formation that I've been mentioning on the show now. This is what I call midterm resistance. This is a weekly continuation chart, still up. I don't know why I've got March 21 here. This is not true. This is the February. In fact, I'm going to spend a little time here on this video just so you know that I know that this is not a March 21 contract. This is a February 21 contract. And it can contain buying into December trade, and below which the market, I'm going to say, is susceptible to falling back to this lower support region over the next 2 to 3 to 5 weeks, somewhere in there. And then if tested, that's a big question, but if tested, the 101.10 to 102.77 area can absorb selling through winter into spring trade, and above which I am still expecting the 122.75 formation over the coming months. But if we close the week Friday clearly above 112.72, I think we're a matter of 3 to 5 weeks away from testing this 122.75 formation. And this is a ceiling of long-term resistance that can contain buying into spring, summer of next year. I will say this, that if we settle above it, my next objective is the upper 130s, low 140s, where we find an equally significant long-term resistance area. But I'm way ahead of myself there. I'm just giving you the heads up in the event we take out this 122.75 long-term resistance area to the upside. And finally, I'm just going to show you one chart with regard to soybeans. We clearly settled above this 11.39 3/4 formation. I think I just mentioned it as 11.40 even on the show. We settled above it a couple of weeks ago. I held off for a week because this first settlement was inside the 1% violation threshold. Last week, this formation actually held, and we closed clearly above 11.39 3/4 by more than a 1% margin. This solidifies a secondary long-term buy signal that should yield 13.79 even. I'm giving this 3 to 5 months, where I might add the market can top out into spring, possibly summer of next year. So that is the 3 to 5 month outlook. I do have resistance levels on the way up in my daily newsletter. You might just do the free trial to catch a wind of that. Downside, if we close the week back below 11.39 3/4, that is considered a failed long-term buy signal, which is in essence a valid sign of weakness into later winter. I then have 10.63 even, not illustrated anywhere here, as what I consider to be a 2 to 3 to 5 week target where we could bottom out on a monthly basis. But I will say that overall, closing back below 11.39 3/4, there's nothing to keep this market falling back over the next 3 to 5 months back into the 930s, which is where this rally really began in late August when we settled above this formation. I then had the 11.39 3/4 formation as my target that was considered able to contain buying into spring, summer of next year. We've obviously taken that out, so now this is a secondary buy signal into the 1370s. But I'll say that closing the week below 11.39 3/4 would allow, and I don't have a strong indication of it, I'm just saying that the market then is susceptible to falling back, easing back perhaps into the 930s once again over the next 3 to 5 months, where the broader soybean market can bottom out well into next year. And I do believe that's all that needs to be said for this week's AgriTalk video supplement. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.